So, good afternoon, good evening. Welcome back to another live stream, guys. So, let me see. Live stream offline. Are we already live? Greeting everyone. Hi, Victoria. How are you? Diva, Alonso, Eichelberger, Ken Smith, Diakera, Raglan. Okay, so my audio seems to be working fine. I have been having some issues with my audio, guys, so I apologize. Today I am trying to make sure that my audio is going to work perfectly well throughout the whole stream, and well, let's hope for that to be actually the case. So please drop a comment down below. Let me know what stocks you guys want me to go over. What a bloodbath across the board today. Another bloodbath, guys. I told you, if I remember correctly, on the stream um, that we had last week, I told you that this is, from a seasonality standpoint, the worst week of the year for the markets. And what do you know, guys? Seasonality is playing out to the penny. So far, let's see what happens tomorrow. Maybe we can see a solid relief rally, but today's close was very, but very, very ugly. So Eli Lilly, good entry point. Okay, yeah, that stock got killed today. Even though healthcare was the best performing sector, and I am quoting, quote unquote, best performing sector because the 11 sectors of the markets went down today. So drop a comment down below. In the meantime, I am going to make a summary of what happened today. Russell 2000 went down 1.56%. The Nasdaq went down 1.82%. Dow Jones goes down 1.08%, and the S&P 500 went down 1.64%. Take a look at these guys. The sectors of the markets, all of them went down today, and the sector that, let's say, had the best performance, even though it closed in negative territory, was healthcare. It went down 0.87%. And if we take a look at the performance of the sectors today, guys, we had, for the most part, a risk-off day. Healthcare went down 0.87%. That's a defensive sector. Utilities goes down 1.05%. And consumer staples, which is another defensive sector, went down 1.29%. When we talk about defensive sectors that benefit from a risk-off market, we are talking about healthcare, utilities, and consumer staples. So those were the sectors that, quote unquote, did the best today, even though we had a very ugly day across the board. You guys know that year to date, we have had, for the most part, three sectors doing the heavy lifting. I have been telling you guys about this on multiple occasions. And today, the three sectors that have done the heavy lifting out this year, um, were, for the most part, the worst performing sectors. So we find over here consumer discretionary going down 2.73%. We also have technology, the most important sector of the markets, going down 1.52%. And we also have over here, I mean, communication services was the third best performing sector, but nevertheless, it got killed today. It went down more than 1%, so it closed lower by 1.23%. Take a look at these guys. Let me show you this. So, market movers. Take a look at the performance inside the Nasdaq 100. So this is an index that, for the most part, has 100 stocks trading inside, and we had today 95 stocks going down and 5 stocks going up. Terrible day across the board for mainly technology. But if we take a look at the S&P 500, you guys know the SPY. Take a look at what happened inside the S&P. We had 465 stocks going down and 36 stocks going higher. So a very, but very tough um, day across the board. And obviously, guys, we have a situation that I have already told you guys about that is putting a lot of downwards pressure over tech stocks, higher multiple stocks, and tech-oriented stocks. What is that situation? I have been telling you guys about the 10-year Treasury yield (TNX), and on Discord I am always telling you guys about both the Dixie and the TNX, or the 10-year Treasury yield. And I remember that 2 weeks ago or 3 weeks ago I told you, watch out for TNX bursting above 4.33%. If this were to happen, I said way back then, we are very likely to see the, seven magnificent stocks going lower. And since those stocks are the stocks that weigh the more inside both the S&P 500 and the Nasdaq 100, when I say the Nasdaq 100, yeah, I am talking about the triple Q. You guys know, I guess that you guys know that the triple Q, or the Qs, they pretty much follow the Nasdaq 100. The Qs, the triple Q, is nothing but an ETF that tracks, that follows the Nasdaq 100. So I told you, watch out for this breakout. If this breakout happens to occur, we are very likely to see lower prices across the board, and that's exactly what happens. So, and I'm about to go over the SPY. You need to keep a close watch on the 10-year Treasury yield. The ticker symbol is TNX. If this indicator keeps going higher, let me pull up here a major time frame. We have a very scary gap over here up to 4.69%. Get this, guys. This is a previous resistance for the TNX back from 2007. 2007. So if TNX keeps going higher, and despite the fact that we can make the case that the S&P and the Nasdaq 100 or the SPY and the triple Qs are a bit oversold, quote unquote. You guys know that I don't like the words oversold and overbought, but we can make the case that we are due for some sort of relief rally. A relief rally would occur if we happen to see the 10-year Treasury yield retracing maybe down to 4.34%. This would imply that most of the tech stocks out there are about to see some sort of mechanical relief that would validate a relief rally tomorrow or maybe on Monday. And you guys also need to keep an eye on the Dixie, the US dollar. Take a look at the Dixie, guys. Let me pull up here a 4-hour chart. This thing is breaking out. Very bad news. The Dixie actually went up today 0.25%, and the 10-year Treasury yield went up today 3%. So these two indicators are very important if we are actually about to see some sort of relief rally, as I said, tomorrow or maybe on Monday, or in the uh, upcoming days. I think that we are due for a relief rally, but I need to see the mechanical confirmation that a rally can occur, because the push to the upside that we have seen um, so far, that we have seen since like 2 months ago in the case of the Dixie, has been amazing, and this has a negative effect over the market in general terms. The Dixie and the 10-year Treasury yield are, let's say, in a, let's say, 80% basis, inversely correlated to the indices. So these indicators are very important in order to validate a potential relief rally that could be taking place, in my opinion, sooner rather than later. Okay, let me pull up here the SPY. By the way, let me show you these guys. Take a look at this. Is very interesting stuff. So in the case of the Dixie, I want to explain you guys further about the dollar. And let me pull up here a chart of the SPY. And you guys know that this is improvised. I am improvising here. And you guys know that I do live stream for the people of my Patreon throughout the whole trading session. So when I am live streaming for you guys on Thursdays, I am making an extra effort because usually at this time of the day, I am very tired. So get these guys. The SPY so far peaked, let's say by late July. Let's call it, let's say July 25th. if we pull up a chart of the Dixie, take a look at how the Dixie, and this is not a coincidence, pretty much bottomed out in late July. You guys can see the inverse correlation, right? So the Dixie found support near 100 points, 99 points. It started to go higher, and this implied trouble for the major indices, the SPY and the triple Qs. So this comparison is very clear, as you guys can see. So um, if you're planning on buying the dip tomorrow, and on your favorite stocks such as Nvda or Tesla or whatever stocks you guys want to trade, or even if you want to play a potential bounce on the SPY, you need to make sure that both the Dixie and the 10-year Treasury yield, or TNX, are going lower. Okay, SPY. And remember, on my Discord channel, I am going to be pointing out the most important areas of interest tomorrow. So we don't need to, to go. Uh, uh, I don't need to provide you guys a very detailed explanation about the SPY, because you guys just need to check on my Discord channel tomorrow, and I am going to be over there letting you guys know um, pretty much what to do, so you can make your own decisions. But today's close was terrible, guys. Terrible, terrible. Ugly close. And why? Because take a look at this blue line. This is the 100-day moving average. So check this out. The SPY didn't close one single trading session below the 100-day moving average since, guess when, guys? Late March. Late March. So the bears scored very, but very big today. This was a huge win for the bears, being able to have the SPY close the trading session below the 100-day moving average. And the close of the week is going to be even more important, extremely important. Okay. So if tomorrow we happen to see some sort of rescue operation, the bulls need to recapture and close the week above $436.50 in the case of the SPY. This is absolutely critical. Closing the week, as I just said, below this upward sloping 100-day moving average is going to be very, but very negative for the bulls. In my case, what am I thinking about for tomorrow's trading session, guys? 433 is going to be a very important spot. By the way, the SPY went down today 1.65%, and it closed the trading session at $431.40. So, in my opinion, if we open the trading session tomorrow above 433 bucks, that could happen. We saw a sizable push to the downside tomorrow. Let's say that the SPY happens to gap up tomorrow and we open in positive territory. If the bulls can recapture, or if they can open the trading session above 433 bucks, we have this gap precisely up to the 100-day moving average that could be potentially getting filled up to $436.50. If we were able to take this trade, guys, let's say with the SPY closing candles above $433-ish and up to this upward sloping 100-day moving average, this would be for the most part a 0.80% profit trade. This would be a very solid trade that we could be potentially taking in order to close the week in or let's say to close the week closing a profitable trade. However, what happens if we gap down tomorrow, guys? I'm thinking that near or pretty much at $426, we could be witnessing some sort of bona fide bounce back up situation, because I do believe that we are going to see at least a decent dead cat bounce sooner rather than later. But check this out, guys. 426 bucks. This would imply that we would be seeing, or that we would be potentially seeing in the next hours a very important gap down. Who knows if that happens? By the way, and I'm not gonna talk macro in this live stream, guys. I know that macro, for the most part, is boring for you. we have a very important macro situation happening tonight around 11:30 p.m. because the Bank of Japan is going to announce a decision when it comes to their policy of the control of the yield curve control. So, and again, I'm not gonna be talking about macro over here. If the markets get what they want, that might be positive for the bulls. If the Bank of Japan happens to stop their policy of that consists on controlling the yield curve, that I think that is going to be perceived as a negative uh, aspect for the market. So if we happen to gap down tomorrow, watch out for 426 bucks in the case of the SPY. This is a previous support that acted as such back in early June. And let me pull up here, guys, an anchored volume weighted average price of the SPY. This is an anchored volume weighted average price that comes from the March low, which was hit on March 9th. And guess what, guys? $426.60 approximately. So we have over here at this level, we have the coincidence of a very important anchored volume weighted average price that again comes from the March low, coinciding with a previous support that acted as such on multiple occasions, by the way, at least on 3 occasions, back in early June. So if we happen to see $426-ish, let's say tomorrow in an aggressive fashion, I am going to be buying the dip hand over fist. So I think that I don't see the burst bringing the SPY below 426 bucks before at least we see a decent dead cat bounce. So for the most part, these are the levels that I am going to be monitoring in the SPY. The chart isn't looking good at all. So I don't know. Expecting a I'm not expecting a huge bounce back up over here. I think that maybe a bounce is going to be a sell the rib opportunity. Over here, we have a downward sloping 5-day moving average. The bears also broke to the downside the 20-day moving average. So I am not becoming bullish again on the SPY from a technical standpoint unless the bulls can recapture this downward sloping 5-day moving average, this white line that you guys can see over here at around for the time being, let's call it 440. All right. Okay. So let's go over some stocks. We are already 17 minutes in. My audio has stopped working, or it actually stopped working, guys, on my last 2 live streams at around, or when we were like 40 minutes in. Hopefully, everything is going to go well today. Okay, advanced micro devices goes down today 4.22%, and it closed the trading session at $96. Guys, very, but very important level over here. This upward sloping 200-day moving average that signals $95. If the bulls lose this support around 95 bucks, that's it, guys. The uptrend is gone, and AMD um, is going to start dealing with a major downtrend. Obviously, that isn't positive at all. I think that I have an anchored value weighted average price. I think, sorry guys, that I have an AV web, an anchored value weighted average price in the case of AMD that is worth to point out. Yes, take a look, guys. Take a look at this line. This is an AV web, an anchored volume weighted average price that comes from the all-time high of AMD, and it signals 95 bucks. Such a critical spot. I'm thinking, guys, that this area of 95 bucks is a natural um, area of support for AMD. So if AMD opens the trading session tomorrow slightly above 95 bucks, and if obviously the markets as a whole happen to be able to pull up, um, I would be expecting a bounce up to 99 bucks, which happens to be a previous support back from August 25th, and this is also a previous resistance back from early May. If we were able to take this trade, guys, let's say that AMD closes candles slightly above 95 bucks. Let's say that we enter the trade or let's say that we start the trade around $95.15-ish and up to 99 bucks, this would be a 4% profit trade. And mind you guys, on the flip side, because the markets are turning bearish, okay, from a technical standpoint, let's say that AMD opens the trading sessions slightly above $95, and if the markets as a whole start to pull back, and especially SMH, the ETF, the semiconductors, if this support of $95 happens to be broken to the downside on good volume, I would be shorting AMD over here. No problem. I would be grabbing puts. So, not a good looking chart for AMD. Let me take a look, by the way, guys, at the market of AMD supply and demand. So let me see what the supply and the demand of AMD is looking like as of now. Take a look, guys. Oh boy. What you guys can see on top of this chart is the demand, so buyers. And at the bottom of this chart, you guys can see the supply, sellers. Take a look at the demand, guys. It collapsed. And as of now, the supply, or sellers, is above the demand. So be careful, guys. If this support of $95 cannot hold, AMD could be having an appointment with 90 bucks. Could be. This could be the next gap down. 90 bucks is a previous support back from early April. Sofi and Nvda, Emmeline Velez. Let's go ahead and take a look. Yeah, but I have some other requests. So Eli Lilly, the beast. Eli Lilly. Let's go ahead and take a look at Lilly. It went down today 3.42%, and it closed the trading session at $550. Okay, guys. In the case of Lilly, in major time frames, this is still being an uptrend. We have an upward sloping 200-day moving average and also an upward sloping 100-day moving average. So, and take a look. I already have a line over here already drawn. So I'm waiting for Lilly at $534. This is a breakout area from which Lilly broke out from back in mid-August. So take a look, guys. The bulls of Lilly worked in some sort of, we can say, bullish rectangle over here. And once they broke out from 534 bucks, Lilly pretty much took off and went up to, I don't know, like 600 bucks. So this is a previous breakout area that I am going to be keeping an eye on tomorrow, guys. I might be a buyer of the dip in Lilly at around 534 bucks, guys. This is a trade that I would be thinking about. Yep. Let me take a look. And mind you, obviously, and I just told you, this is still an up. This is still a major uptrend in major time frames. Okay. However, sellers have been making a lot of progress over here, guys. They already broke to the downside this upward sloping 20-day moving average, and as of now, the 5-day moving average is downward sloping. So this is not a good sign from a technical standpoint, but I'm thinking that I am going to be taking a shot on Lilly near 535 bucks. Let me take a look at the market structure of Eli Lilly. Let me see Eli Lilly. So let's take a look at what the supply and the demand is looking like over here. And take a look, guys. The demand is decreasing. However, the supply is also decreasing and below average. So we can make the case, so we can reconcile this market structure with the technical chart of Lilly, and we can confirm that buyers started to walk away from Lilly, but sellers are starting also to walk away. So I'm thinking, and I could be mistaken, this is not a forecast, this is an estimate. Let's just put it that way, that Lilly could be bouncing back up from 534 bucks. This would be my trade in the case of Eli Lilly. Okay, I have Amazon, amazing Amazon. Alonso. Let me take a look at amazing. This stock is getting absolutely demolished, guys. Absolutely demolished. And I think, guys, that for the most part, when it comes to the earnings reports that came out for Q2 of this year, I think that Amazon posted by a mile the best earnings report out of the, seven magnificents, sorry. And the stock is getting killed, so it looks like the markets are starting to be a bit concerned about the consumer, about a potential situation in which the consumers could be under pressure. And, for the most part, this is a retailer, right? An online retailer. Okay, this blue line that you guys can see over here is this upward sloping blue line is none other than the 100-day moving average. That, by the way, guys, is coinciding with this other blue line, this dark blue line, that happens to be the 100-week moving average. This is a very important spot for Amazon. I am going to draw a line over here, and you guys know that I am improvising. And take a look, guys, at how this 100-day moving average happens to coincide with a previous support back from early August, and also with a previous resistance back from mid-June. Very important spot for Amazon. Bull would argue, an advocate of the RSI would say, oh, yeah, the RSI on the 4-hour chart is very low. It is signaling 17 points, so Amazon is due for a bounce. That could be the case. So very important spot, guys, near $128. So let's say that Amazon opens the trading session tomorrow, guys, holding this 100-day moving average, and let's say that the bulls can close candles slightly above $128, say 129, 128.80 or something like that. If that were the case, we have two potential gaps to the upside. The first one, up to $131. $131 is a previous support back from late August. And I can also see over here a potential second gap up to $133. So let's do some math over here from $129 up to the first gap up to $138.50. This could represent a 1.20% profit trade, and up to the second gap that I just told you guys about, 133, this could be a 3% profit trade. Definitely, guys, a stock to keep an eye on if we are going to play a bounce, a relief rally tomorrow in the markets. On the flip side, if the markets keep going higher, and if you guys see Amazon either losing a support, $128, or not being able to burst above this level, this could be a short opportunity as well. And again, guys, in most of the charts that we are going to go over in this live stream, we are going to see the same situation: uptrends in major time frames. In the case of Amazon, we have an upward sloping 200-day moving average, and also an upward sloping 100-day moving average. 200-day moving average and 100-day moving average. But in minor time frames, and remember, guys, the reversion of an uptrend starts in minor time frames. And then we see a major reversion that transcends into major time frames. So in minor time frames, the bears have been making a ton of progress, guys. So the net aggregate opinion of the markets is telling us that there is something concerning going on over here, because again, this was a company that posted a very decent earnings report, and now the stock is getting killed with no bad news at all. So the net aggregate opinion, the short of Amazon more specifically, is telling us that the markets are concerned about something over here. What is that something that the markets are concerned about? Maybe the consumer getting weaker. Who knows? But over here in minor time frames, the bears already broke to the downside, the 20-day moving average, and we can also see over here a downward sloping 5-day moving average. Let me reconcile the technical chart with the supply and the demand of Amazon. Let me see over here. Alrighty, what do we have? And take a look, guys. The market structure of Amazon is actually positive. We have a rise in demand, also a rise in supply, but we can say that we have a tie over here, guys, between buyers and sellers. So I'm thinking and basing my opinion on the market structure of Amazon that we have a high likelihood for the bulls to find support, or for the bulls to hold as support $128 and then bouncing back up. Not a problem. We are here to help. Meta. Let's go ahead and take a look at Meta. Do you guys believe that Meta, you know that Elon Musk said recently, that wasn't Tuesday or something like that, that he might start, that the Twitter subscribers might need to start paying for using Twitter or something like that. And I think that Meta has a similar service, right? I mean, Instagram has a similar service relative to Twitter. What's the name of it? Threads, is it the name? Do you guys think that if Elon starts charging Twitter customers or the Twitter subscribers some money in order to tweet anything, do you guys think that that is going to be helpful for Meta? Maybe, I don't know, because um, when Meta first launched this new service, Threads, I think that that thing lasted like 2 days. It was some sort of very, um, it was some sort of hype that didn't last long. But maybe this could represent good news for Meta, and that could help the stock in order to go higher. Let me take a sip over here of Sprite. So Meta went down today, um, 1.31%, and it closed the trading session at $295.73. Um, this is a an acceptable looking short. We have an upward sloping 200 DMA, upward sloping 100 DMA. We Okay, so Meta closed the trading session today, guys, below the 5-day moving average and slightly below the 20-day moving average. In the case of Meta, guys, we don't see um, as much damage as we are seeing in the case of AMD and and the other stocks that I went over, right? Lilly. So over here, we can make the case that the bears haven't been able to make a lot of progress in minor timeframes. So in the case of Meta, guys, I would like to see it. I would like to see the bulls of Meta recapturing this 5-day moving average near $302. By the way, $302 happens to be a previous resistance back from early September, also a previous resistance back from late August, and this is also, by the way, a previous support back from early August. This would be my trade, guys. Say that Meta closes candles slightly above $302. If that were the case, we have two gaps. The first one up to $310. This is a previous resistance back from early September, and also a previous resistance back from September 14. So let's do some math over here. We start the trade on Meta, let's say $303, from $303 up to $310 ish. You guys are looking at a 1.50% profit trade, and up to $313. This could represent a 3.30% profit trade. Nothing to sneeze at. So this would be the trade that I would be interested in the case of Meta. It would be very positive for the bulls being able to recapture this 5-day moving average. And in the case of Meta, guys, the net aggregate opinion of the markets is telling us that they are not as concerned in the case of Meta relative to Amazon and AMD and the other stocks that have been getting absolutely killed. So this is a kind of positive chart over here. Nevertheless, let's take a look at the supply and the demand of Meta. So what is the supply and the demand looking like? And the demand is stable and the supply is starting to decrease. It is starting to fall little by little, and it is, as of now, below average. So we cannot make any case from a market structure standpoint, neither a bearish, not a bullish case over here, but I would be a buyer of Meta in, normal market conditions if this support or if this 5-day moving average happens to be recaptured by the bulls. Tesla. Let's go over Tesla. Smooth one is asking about Tesla. There you go. So how are we doing over here? Let me see. 34 minutes in. Okay. Tesla goes down today 2.62%, and it closed the trading session at $55.70. Again, guys, the bulls are trading above this 200 DMA and also above the 100 DMA, but in minor time frames, they lost the 5-day moving average, which happens to be downward sloping, and they closed the trading session today below this 20-day moving average. Ideally, guys, I would like to see the bulls recapturing $258. And so Tesla went down today 2.62%, and it closed the trading session at $255.70. I would like to see the bulls recapturing, again, as I just said, guys, this 20-day moving average. So I would like to see a process of consolidation above $257. That would be very positive because the bulls would be recapturing an important moving average, such as the 20-day. And from, or let's say that we start a position on Tessie slightly above $207. So from $257 after the 20-day, up to the 5-day moving average, up to $264. This could 2.30% profit trade. Nothing to sneeze at. Okay, to the downside, what could be potentially happening over here? Let me see. Where could be Tesla finding support at if it keeps dropping? Over here, I can see, guys, this blue dark line, which is the 100-week moving average, $250, which is also a fat number. This could also be a potential spot of support for Tesla. So Tesla is going to depend on whatever the markets do as a whole. So I think that if tomorrow we happen to see a relief rally in the markets, we could easily see Tesla. Sorry, guys, I have a telephone call over here. We could be seeing Tesla recapturing this 20-day moving average. And if the bulls can close candles above $228, I can see this gap getting filled up to $264-ish. RSI at 29 points on the 4-hour chart, so we cannot make any case out of it. Let me take a look at the market structure of TESI, TSLA. Let me see. All right. By the way, guys, you guys know that Tesla trades inside the consumer discretionary, which is the same sector in which trades Amazon, in which Amazon trades in. So Amazon has been getting killed, and we have this weird phenomenon in the markets, which is the ETFicization of the markets. So we can make the case, guys, that if Amazon is getting absolutely killed, then maybe that could be potentially affecting Tesla in a negative way. So if I were thinking about going long Tesla, I would keep an eye on Amazon. Okay, it would be a positive signal for Tesla. Again, closing candles above $257 and not having Amazon on the flip side getting killed. Okay, just keep that in mind because these two stocks are the most important holdings inside consumer discretionary. That's a tip that I am giving you guys over here. Okay, market structure of Tesla. What is going on over here? Take a look, guys. Good looking market structure for Tesla. Remember, on top of this chart, you guys can see the demand, and at the bottom, you guys can see the supply. Demand buyers, supply sellers. We have a rise in demand and a fall in supply. So this is very positive. So I'm thinking that if Tesla closes candle above $257, and again, if the markets aren't getting killed as a whole and stuff like that, I might be grabbing some Tesla calls. Yep. There's still hope for the bulls of Tesla over here. Okay, Netflix. Wow, what a disaster. I think that we had news today about the Hollywood strike, guys, right? This could be good news for Netflix. So apparently the strike in Hollywood between directors and actors and stuff like that could be about to cease, and that could be good news for Netflix. So Netflix went down today once again, 0.56%, and it closed the trading session at $384.15. So Wow, this chart is starting to look very, but very ugly, guys. We have a downward sloping 5-day moving average. The bulls are already lost the 100-day moving average, and obviously the 20-day moving average was also lost. So I'm thinking, and by the way, guys, I have a call option over there with an unrealized loss that I need to average down that expires in late October. Um, we have a showtime zone coming up for the bulls of Netflix, guys, at 380 bucks. 380 bucks is a previous resistance back from mid May, and this is also a previous resistance back from early February, and also back from early February. The bulls failed on 2 occasions over there. Very important spot for Netflix. If the bulls aren't able to hold 380 bucks, then we could make the case that Netflix has an appointment with the 200-day moving average, which happens to be upward sloping. That implies that this moving average could be acting as a good support near $366. So these are the levels that I am seeing over here. In order to go long Netflix, guys, I would wait for the buyers to show some sort of strength. So how the buyers would be able to show some strength um, in this technical chart by recapturing this downward sloping 5-day moving average. So let's say that Netflix closes candle slightly above this 5-day moving average, slightly above 390 bucks. That could be, or that could be signaling that they are about to gather momentum in order to make a push higher, in order to potentially being able to fill this next gap up to a former support at 400 bucks. This is a former support back from mid-August. So let's take a look at this trade, guys, and let me zoom in here. So closing candles slightly above this 5-day moving average, this would be a good sign, okay? Having the bulls recapturing the 5-day moving average. So let's say from 392 bucks up to 400 bucks, again a previous support. This could be a 2% profit trade. So nothing this needs that. In the case of Netflix, that would be a trade in which I would be interested in if, again, I see the markets happening, being able to pull up a green day, maybe tomorrow or maybe on Monday, or maybe a visit down to 380 bucks. Yeah, I think that Netflix is about to find support, and I think that the stock of this company is very likely to catch some sort of relief rally. I would say sooner rather than later. Let me take a look at the market structure of Netflix. And again, if the news about the strike in Hollywood happens to be confirmed, that could be a good that could be good news for Netflix. Take a look, guys. The market structure looks awful, absolutely awful. We have a collapse in demand, and the supply is starting to decrease, but it is still way above the demand. So obviously, guys, buyers are nowhere to be found in the case of Netflix. In the case of Netflix, but 380. This is the, I mean, I'm not going to say the last line of defense for the Bulls, because I would say that the very last line of defense for the Bulls would be this upward sloping 200 DMA near 365 bucks. But yeah, let's say if Netflix can catch a break, bouncing back up from 380 bucks. Did I miss Nvidia? No, you didn't. I haven't gone over Nvidia. Let me take a look over here at Nvidia. Let's see. I'm a bit nervous, guys, about going over 40 minutes. Okay, we are 44 minutes in, and my audio is still working. Okay, take a look at this, guys. So Nvidia went down today 3% pretty much, and it closed the trading session at $410. Let me zoom in here on the 4-hour chart. So we still have an upward sloping 200 DMA and an upward sloping 100-day moving average. But check this out, guys. The bulls are about to lose as support this upward sloping 100-day moving average. This 100-day moving average, by the way, happens to coincide with a previous support back from mid-August. So this is a very, but very important support for Nvidia. In my case, and if I happen to see SMH, the semiconductors ETF catching a break tomorrow and going higher, if Nvidia opens the trading session slightly above this upward sloping 100-day moving average, so slightly above $408, this could be signaling that the bulls are gathering momentum in order to potentially being able to fill two gaps to the upside. The first one up to $420. $420 is a previous support back from, sorry guys, this is a previous support back from mid-August, and this is also a previous support back from early July. So let me zoom in here. Let's say that we start the trade on Nvidia near 412 bucks-ish. So after we happen to be able to confirm that 411 bucks is acting as support from $411 up to $420 ish. We are looking at a 1.30% profit trade. And mind you guys, up to the 5-day moving average, which could be potentially the next important gap to the upside for the bulls of Nvidia, this could represent a 3.82% profit trade. So in major time frames, and again, as we already saw in the case of AMD and Amazon and other stocks, we are still seeing over here an uptrend, okay? Because these stocks are trading above upward sloping 200 and 100-day moving average. That is still hopeful for the bulls, but in minor time frames, the bulls are starting to make a ton of progress, and in the case of Nvidia, the stock of this company is not the exception to the rule, because we have a downward sloping 5-day moving average, and the bulls already lost the support of the 20-day moving average. So this is going to be showtime for the bulls tomorrow, guys. $408 in the case of Nvidia. Let me and again, guys, if we want to talk about a potential bearish case for Nvidia, if let's say that this stock opens the trading session slightly above $408, and if this support happens to be broken to the downside on good volume with the SMH going lower and stuff like that, the Qs, then we could see Nvidia paying a visit down to 380, maybe $370, which are previous areas of support. Let me take a look at the supply and the demand of Nvidia over here. Let me take a look at Nvidia Corporation. Well, let's take another sip. Wow, take a look at this market structure, guys. Horrible. So buyers are nowhere to be found. The supply is way above the supply is way above the demand. That implies that sellers, as of now, are easily outnumbering buyers. So this doesn't look good at all, guys. Watch out for $400. This is going to be definitely showtime for the bulls of Nvidia. Yeah. What other requests do I have over here? Triple Q. Okay. And Casco. And I think that we did it, guys. We are about to go over 50 minutes, and I don't want to jinx it. Maybe my audio could stop working at any moment, so I don't want to jinx it. Okay, the Qs. Um, okay. So bloodbath for the Nasdaq 100 and the Qs. It went down. The Qs went down today 1.83%, and they closed the trading session at $357.86. Guys, this is a very obvious potential area of support for the Qs. This is the low, the August low near $354. The bulls lost today as support this upward sloping 100-day moving average. Very bad sign, guys. Check this out, guys. The Qs haven't traded below the 100-day moving average since late January. Can you guys figure how important the close tomorrow above $360 is? If the bulls close, because they did it today, they closed a bit below the 100-day moving average. If the bulls close tomorrow below the 100-day moving average, this would imply that they are having a weekly close below the 100-day moving average that we haven't seen since early, let's call it mid-January. That implies, or that is screaming danger for the bulls. So maybe tomorrow we could be seeing the Qs bouncing back up from $354.20 ish. For the people that like to take a look at the relative strength index, the RSI, they are going to argue that the Qs are oversold and that they are due for a bounce. We can see the RSI on the 4-hour chart sitting at 18 points. Let me take a look at the RSI of the Qs on the daily, and take a look, guys. On the daily, the Qs are not, the reading that we can see of the RSI of the Qs on the daily chart is not that low, 33 points. So maybe we are going to see $354 tomorrow. This is going to be showtime for the bulls. Not only, as I just said, guys, a previous support back from August, but also this is also a previous resistance and a former 52-week high for the bulls back from late May. Showtime for the bulls, definitely near $354 if they happen to bounce back up. From that area, from that level, we have a potential first gap up to the 100-day moving average. And then if they keep going higher, maybe we could see a visit up to the 5-day moving average, $366. That would require a super rally tomorrow. Let me see. Yeah, I don't think that is going to happen. That would imply 3% rally. I don't know, guys. Um, you guys have to understand that from a seasonality standpoint, until mid-October, the seasonality is going to be playing in favor of the birth. So I think that both the SPY and the Qs are due for a relief rally, but that relief rally in the short term, in my opinion, might represent a sell the rib opportunity. So and the shorts are telling us that. Okay, the sellers are taking control over here of most of these shorts. Okay, please let me know if you have any other request. We are 52 minutes in. There you go. My audio is still working, so that's a good thing. Let me go over SoFi. I haven't gone over SoFi. Okay. By the way, guys, they were buying puts of SoFi yesterday. Let me tell you. So yesterday, someone, we don't know who that person or what institution did it. Someone bought SoFi puts that expire on October 20th with a strike of $7.50. And the total investment on this trade was $1.1 million. This is some sort of, unusual and option alert that I am providing you guys today. Again, $1.1 million on SoFi puts that expire on August 20th. And those puts were purchased with a strike of $7.50. So someone is putting a lot of money on the table, believing that SoFi has an appointment with lower prices. Not a good looking chart over here, guys. We have a semi downward sloping 20-day moving average. The bulls lost a support. This downward sloping 5-day moving average. Again, you guys know that I use the 5-day moving average, or this white line that you guys can see over here, in order to determine who is in charge of minor time frames. So definitely in minor time frames, the Bears are in total control of SoFi, and the Bulls closed the trading session today below the 100-day moving average. Again, a believer on the RSI would say that SoFi is a bit oversold, which is a concept that, again, I don't like, and that SoFi is due for some sort of relief rally. In the case of a trade to the upside, wait for the buyers to show some sort of strength, maybe by bursting above this 100-day moving average, so recapturing $8. That would be a good sign from a perspective that some buyers are stepping in once again over here. So let's say that SoFi closes candle slightly above this 100-day moving average. So let's say that SoFi consolidates slightly above $8 from $8-ish up to the 5-day moving average. This would represent a 4.27% profit trade. So this could be a play tomorrow, guys. If the Bulls manage to be able um, to pull up a green day, if SoFi consolidates above $8, who knows? Maybe we could be taking a trade to the upside over here. On the flip side, not being able to burst and recapturing this upward sloping 100-day moving average would open the door for lower stuff. That lower stuff could be coming in at $7.30, which is a previous resistance back from early June. So, not a good looking chart. I wouldn't be interested in playing a bounce in the case of SoFi. In the case of SoFi, from $7.35, I would be rather interested in maybe taking a trade to the upside over here if the bulls show some strength by recapturing $8 and being able to consolidate above that level. Let me take a look at the market structure of SoFi. So what is going on over here for SoFi Technologies? Supply and demand. And well, the supply and the demand is looking good, guys. Take a look. The demand is through the roof, and the supply is also rising, but below the level of the demand. So I'm thinking, and again, in normal market conditions, and if tomorrow the markets happen to be able to catch a break, that SoFi might be a buy above this 100-day moving average, so above $80 approximately. I already went over SoFi, BAWA, and me. I haven't taken a look at BAWA in such a long time, guys. Let me see. Alibaba, $84. Such a crappy stock, guys. Most of the Chinese stocks are just a waste of time, huh? Unless you want to short them, right? Um, BAWA went down today 1.90%, and it closed. Sorry, guys. The trading session at $84.11. I mean, horrible chart, guys. This is a major downtrend below all the moving averages. You guys know the trend is your friend until she throws your shit out the window. So I wouldn't touch this stock, guys, unless the bulls can show some sort of strength by maybe recapturing this downward sloping 5-day moving average. So recapturing $86, this could be a quote unquote positive sign in order to go long BAWA. Um, Many technical traders, guys, would argue that on the 1, 2, 3, 4, and 5 last occasions that BAWA has visited this area near $80, it has bounced back up. That's an acceptable argument. I am not a buyer of downtrends. I rarely ever trade downtrends. So, um, yeah, if any of you guys is some sort of deep buyer, $80 could be producing a bounce, as it did on the last 4 occasions that BAWA visited. That level, I wouldn't be a trader in that case. I wouldn't be interested in taking a trade on BAWA at $80. But rather, I would maybe, I don't know, guys. I am not really into Chinese stocks. I don't know. In my opinion, I would give it a thought if the bulls can show some strength by bursting above this 5-day moving average or bursting above $86.50 ish approximately. However, let me take a look at the supply and the demand of BAWA. Let me see. Alibaba. Such a waste of time, guys. These Chinese stocks. And take a look. In the case of the market structure, or in the case of the supply and the demand, we have some sort of light at the end of the tunnel. And why? Well, because the demand collapsed, but it is starting to rise once again. So buyers are starting to show up over here, whereas the supply is decreasing and below average. So this could be signaling that the bulls are going to be able sooner rather than later of either recapturing this 5-day moving average and keep going higher, or maybe engineer some sort of bounce back up operation from $80 approximately. Smooth is asking about the Messi of AI. Palantir. Let me take a look at this. Went down today 5%, and it closed the training session at $14. And the pumper of the knives called out the peak to the penny, guys. When Palantir hit 20 bucks, this motherfucker said that Palantir was the Messi of artificial intelligence. He called the peak to the penny. Such a pumper. And he did it, by the way, in the case of Apple as well. So long story short, guys, do not trust analysts. Unbelievable. Okay, in the case of Palantir, not a good looking chart. Um, we can make the case that at least the bulls are trading above the 200-day moving average, but they already lost the 100-day moving average. They are trading below this downward sloping 5-day moving average, also trading below the 20-day moving average. So, can Palantir find support near $13.60? This is a previous, and this is an interesting spot for Palantir, guys. This is a previous support back from mid-August, and this is also a previous support back from late June. So yeah, PLTR could be bouncing back up from here. So let's say that we take a trade on Palantir, and again, guys, don't buy the dip. Remember, buy strength after the dip occurred. So if I were thinking about taking a trade on Palantir, I wouldn't be trying to guess if $13.60, which is the level that I am pointing out over here, is going to act as a support. I would wait for others to do the job for me. So I would be waiting for others to buy the dip over here, and if Palantir confirms support over that level, I would be entering the trade near $13.90 or 14 bucks. From $13.90 or 14 bucks up to the 100-day moving average, we are looking at a 4.37% profit trade. And on the flip side, and sorry for saying this, the knives, if Palantir breaks this support, guys, at $13.60, we can make the case that we have a huge gap down over here, guys, probably down to a previous resistance at $12 approximately. This is a previous resistance back from mid-May. So not a good looking chart. Definitely the birds have made a lot of progress over here with the Messi of artificial intelligence. And this is an important spot for the bulls, $13.60-ish. Let me take a look now at the supply and the demand of Palantir. Let me see how many people pumping up this stock on YouTube, guys. Unbelievable, guys. And I am a trader, a full-time trader. I love technical analysis. But unlike most traders out there, guys, I know how to carry out fundamental analysis. I know how to read an income statement. I know how to read balance sheets. I know how to read a cash flow statement. So um, when I take a look at a chart and I have an analyst, any analyst out there pumping up a stock, I go over the fundamentals of that company. And in the case of Palantir, guys, this is such an expensive stock from a financial standpoint. You guys have no idea. And when the stock of this company hit 20 bucks, this motherfucker of the knives said that I don't know what the price target was. I don't know, like 30, 40 bucks. Or he said that Palantir had a 40% upside potential. Unbelievable, guys. In the case of a good company, it isn't a bad company, guys. It is just an expensive company. It is just a pumped up stock that is going to have a lot of trouble, guys, justifying this valuation in the near future. But whatever, that's a topic for another live stream. Okay, in the case of the supply and the demand is kind of stable, but take a look at the supply, guys. The supply is rising and above average. So be careful here. If Palantir breaks $13.60 to the downside, this is some sort of good night Irene type of situation. So be careful here. Intel, and I think that I am going to wrap it up with Intel, guys. We are an hour and 4 minutes in. Okay, Intel, INTC. We had the CEO. Wow, take a look, guys. This stock got killed today. My goodness, bro. So Intel went down today. I mean, not today. During the last trading sessions, Intel has gotten killed. Killed. So Intel went down today 0.12%, and it closed the trading session at $34.65. Be careful with the semiconductors, guys. Let me take a look at SMH. I didn't take at SMH. I didn't take a look at SMH today, guys. Take a look at the SMH, guys. This is the semiconductor ETF. This chart isn't looking good at all. And if SMH keeps dropping, guys, we are very likely to see lower prices across the board when it comes to most of the semiconductor stocks out there, such as AMD, Intel, Qualcomm. You guys know the deal. So, in the case of INTC, let me see. We have an upward sloping 200 DMA, upward sloping 100 DMA. But the bears have made a lot of progress over here. They broke to the downside both the 5-day moving average and the 20-day moving average. So what about a visit down to this 100-day moving average? Let me see, guys. $33.30. And check this out, guys. This upward sloping 5-day moving average. The fact that this moving average is actually upward sloping implies that it might act as a support. And this 100-day moving average happens to coincide with a previous support back from July 20th, and this is also a very easily identifiable previous resistance back from early April. So what about Intel finding support at $33.45, guys? It could be bouncing back up from here, from $33.45 up to 36 bucks. Previous resistance back from mid-August. This could represent an 8% profit trade, guys. Um, let's see what happens, guys. I'm curious about the semiconductor stocks. We have a bunch of very expensive semiconductor stocks out there, such as AMD and Nvda. And if the, let's say that if the perspective of the markets relative to the AI hype and stuff like that happens to change a bit, and if the markets happen to start to look for more reasonable valuations, this could be a stock that could be benefiting from that situation, guys. Intel, maybe, I don't know, Oracle. Um, I mean, Oracle is not a semiconductor stock, but you guys, get the point, right? So I don't know. Let's see. Let's see what happens, guys. The semiconductor ETF and most of the semiconductor stocks out there are also due for a bounce. And Intel is it is an interesting stock over here. And on the flip side, guys, if Intel breaks this support at around $33.40, we could be talking about lower prices, maybe down to a previous support at 32 bucks. This is a previous support back from mid-August. So uh, pretty much the same situation that I have been telling you guys about throughout the whole stream. We can make the case that in major time frames, we are seeing here, I mean, at least in the case of the 4-hour chart, we are still seeing positive aspects for Intel because we can detect, we can see an upward sloping 200 DMA and also an upward sloping 100 DMA, but in minor time frames, the bears are gaining control of the stock of this company. So let's see what happens, guys. Thank you very much for joining up today. I am going to wrap it up here, guys. I'm extremely tired. We have been streaming for an hour and 10 minutes. Nothing went wrong with the stream today, lucky enough. So I will see you guys on Discord, and tomorrow I am going to be pretty usual calling balls and strikes throughout the training session. So thank you very much for coming over, guys. Okay? Thank you. Smooth and me. Love your enemies. Emmeline Veles. Linus the Fourth. Dietrich Sodina. Jesus Christ is love. Of course it is. Of course he is. And me, Junior. and events and events. You guys have weird names, guys. James Randolph, Jose Perez, Alonso, RB, Jaquera, Victoria, RB. Thank you very much, guys. Okay. See you guys on Discord and tomorrow, first thing in the morning. Take care. Bye.